Great, thanks, Mark. I hope you can hear me. I'm Sridhar Chitiala. I would say retired banker and now in venture capital and private equity. And we run a single family office. We make investments and we make investment through the funds. I've done different stints in JP Morgan, managed several businesses, global. I was head of telecom in Citi. I was the COO for Wachovia Wells. I was also in Australia in working with NAB and Commonwealth during that period. Extensive work in Asia. A lot of the plumbing that you see today in China is much of the work. We are one of the banks which contributed towards that. We're proud to say that, and same in Vietnam when Vietnam came into the mainstream market. Now, in terms of the question that how we have a public markets fund, which we manage for non-profits, and we also manage on our own. We don't do public offering of our public markets investments. Where we have invested, Mark, or to the team, we are highly US and US equity. 70% of our allocation is in US equities. We do about 10 to 15% allocation in Europe. We are big on Japan. We have been big on Japan for the last 2 years as Japan kind of unwinds itself from all its legacy issues. We do, again, 10 to 15% in the Japanese market. We have a small allocation in Taiwan. We are optimistic on Taiwan, notwithstanding geopolitical tensions. We have started to increase our exposure to India, and we do India. We don't have an African allocation. We don't know much about those markets. That would be our typical allocation. We don't do much in Southeast Asia. We do a small allocation in Australia, particularly in the energy and banking sector. So that's where I would put my money.
Okay, fair enough. This is a little bit of a competition question. So maybe Margaret, it's not in Africa. Maybe you want to make an argument for Africa.
So if I would love to have $1 billion. So we were talking earlier, Jeff and I, about fintech consolidation. And fintech is the sector I know best. So, and I have the privilege right now of serving as a judge of the $1 million Milken Metsepi Fintech Prize for Africa, which has innovators from all over the world who are looking at how to apply and adapt their tech innovation for the final frontier market. So anyway, $1 billion, I would certainly allocate 20% of that for fintech, global consolidation, and innovation. I care deeply about food security, and clearly Africa is an important part of having extremely good arable land and extremely poor beneficiation, capturing the value added. So I'd also probably have 15% allocation for food security, both agriculture, innovation, distribution, and some of that allocation would go to Europe for helping to build the global markets. Don't know anything about real estate, so I'll pass on real estate.
We're going to talk about assets later.
Okay.
Hi, I'm Nicholas DeSantis. I am the Chief Disruption Officer of Megavisionary. Megavisionary focuses on helping big corporations become startups again. And I'm on the board and the president of Gold Mercury International, a think tank established in 1961, specialized in global governance. Global governance is not global government. It's the ability of all stakeholders at a global level to interact together to generate value and fight and solve global challenges. The question is, so what would I do with $1 billion? Sure.
It's really fun.
Yeah. Well, at Gold Mercury, we created a model to manage global complexity. So we structure the planet in 8 global areas. You can go to goldmercury.org and see that model. it monitors the world and it identifies for each global area the biggest challenges of humanity. So I would go to the model, I would go to the global health area, the global environment area, the global culture area, and then I'll start allocating for the biggest top 10 challenges in each area. Give an example, we had a meeting a week ago about reviewing those top 10 challenges. One of the biggest problems we're facing in humanity now is dementia and Alzheimer's disease.
Mm-hmm.
And it's one of the things that there's a lot of interest and investment in, but still we're far away from understanding how to cure it. So I'll use that model to allocate the funds.
Sam, word on that. We're going to come back to that in the last panel.
Okay.
That's how that's something that goes across all geographies. And I think this is what our room and all these rooms that we do. We need to optimize how we use our brain power and our financial power to solve these kind of issues.
Right.
So we may be Todd Rupert, by the way.
Common.
He's on her board too. He might be investing in Sridar's company. By the way, you're going to benefit from Africa, Sridhar, on the tone tag. By the way, you're on mute. Okay. If I have to say it 3 times, you owe us all a drink. You're still on mute.
Yeah.
Okay, you're good. But just the Todd Rupert spirit lives. Now we're going to talk about the GCC with another one of your markets that you're interested in.
Yeah, I was going to say, I heard the question as, defend your region, not what would you do with $1 billion? And I hadn't heard anybody mention the Middle East just yet. My name is Meredith. I'm a director at a firm called Control Risks. We do, I like to say, the sort of whole spectrum of intelligence and risk work, from the shiny end to the pointy end. I sit very firmly on the shiny end and get to talk to nice people like you about how to sort of responsibly and successfully invest their money around the world. And then there are people in my company who do, hostage and kidnap rescue and sort of everything in between. So when I say the full spectrum, I really mean the full spectrum. When Mark and I were sort of talking about this, he asked me to think about things that excite me and things that scare me about the GCC and what I see about trends and investment there. So maybe that's where I'll sort of pick up, which is I think the thing that excites me the most about what I've been seeing about the activity out there is the maturation of Saudi Arabia as a market for investment and then a partner for investment as well. And I think we've seen people flocking out there in large numbers in the last couple of years, where it's sort of been a situation where nobody else really had any money to spend. And so everybody sort of ran to the GCC for the first time. And now I think we're seeing these sort of doom and gloom headlines about the sort of era of easy money and the GCC is over. Saudi actually wants something back for its money. How dare they? But at the same time, I think sort of having been in a position to help people do business out there for the last kind of 10 years or so, the sort of flip side of this is the concern that I've heard from investors a lot, which is about Saudi sort of not having been a mature investment partner just yet. So sort of favoring going to the UAE or somewhere else instead, which carries its own risks. But I think it should be a sort of positive for everybody that Saudi is becoming a place where they can sort of go and I think kind of go about business, with sort of keeping in mind certain specifics about how to do business there, but kind of do business like they would anywhere else now. I think it's an exciting thing for the investment community, but also sort of for the world as Saudi continues to kind of normalize and modernize.
Maybe when I think of an aspect of Saudi, it's not just money, it's also it's a market, and it's a growing market.
Yeah.
And we saw the Africa slide that you showed earlier of Africa catching up with Asia, of course, bifurcated Asia or trifurcated. What I think is fascinating is if they really want to double their population, in Dubai, we're talking with Roberta, you know, how many Emiratis are in UAE now? For, you know, second
1 million over.
10%. Soon will be 3, 4, 5%. But if Saudi wants to double, that's a change of culture. And if you're going to attract the best talent, keep the talent there, as Dubai has in Abu Dhabi. It's a whole different dynamic, and you live there. Is that, how do you see that transformation coming? And, you know, Europe is trying to, like, Europe, and we all have our immigration issues, but particularly Europe right now, it's not really, it's muddling. So I'm just curious on this whole population dynamic aspect, and then what those transformations look like for you from investing or otherwise.
Yeah, I think, you know, I've sort of been in the trenches with the national transformation programs in Saudi and the UAE for the past kind of 10 plus years. I was out in a former life with McKinsey, sort of building the architecture of those transformations, 10 plus years ago. And I think kind of having, again, sort of like been in the trenches with it, what's impressed me the most about Saudi's approach to it is how, I think, thorough they've been at really thinking through every level and every sort of detail of what's necessary to achieve the plans they want to achieve. Like, it's incredibly detailed, what they know they need to do to get there. And then the other thing that's impressed me the most is how open they've been to the challenges of hearing how they needed to change from like a social standpoint, right? So when we're talking about population and attracting talent and retaining talent, hearing those challenges back in the day, and then responding to them now. And I think it's something that's hard to appreciate. Again, if you've sort of only been in Riyadh in the last couple of years, it's hard to appreciate just how much it's changed in the last 10 and the pace of transformation that's happened there. I think one maybe anecdote that I think is telling about this is that it's not a secret that, you know, anymore that, so I can talk about it, that McKinsey, you know, worked on the kind of beginning of NEOM, right? And when I was sort of part of the first kind of pitch for the original NEOM project, and we felt that we won that because we were the only ones who went in that room and said, you're going to have to let people drink. And you're going to have to let people wear what they want. And we're the only firm that went in and said the kind of difficult things to a sort of scary audience to maybe say those things.
What did they say?
They said, we know. And it's happening now, right? The first liquor stores open in the DQ, which is the diplomatic quarter in Riyadh. There have always been sort of banging parties at the embassies, but now it's sort of outside the embassies and outside the compounds too. But it's funny now, you go into Riyadh and of course everybody's hearing like, oh, Carbone is open in Riyadh now. And I asked them if they made the vodka pasta with vodka and they said no. But you go into all these restaurants, those are the hottest restaurants in the world, and they all have their bars already built. They're built and they're waiting because they're all gonna be, it's gonna start with sort of like the way it was in Doha and in Dubai, where it's zones of sort of like shopping centers and Western hotels. But everybody knows it's coming in the next kind of year and a half. Yeah, and it's basically a matter of sort of slow pulling the population up to it. So the pace of change has been because it's a realistic pace of change.
I just have a comment and a question about
Yeah, I was just going to mention, I was there in March and my taxi driver says, if you find alcohol, let me know.
So Meredith, my comment is my best friend in London is a star architect who works for OMA and just came back from NEOM and was served a very nice glass of wine with dinner. And she was asked to move there. She wasn't quite ready yet. But anyway, you're absolutely right about the trenches. My other observation is half of the Lunch Africa, North African portfolio has already moved in the past year, as in they're continuing to operate in Egypt or Tunisia, but they all have opcos in Saudi and or UAE, much higher margins. So I was not aware that Saudi is trying to double the population, but so question back to you. For these North Africans, do you think they would be given Saudi citizenship if they wanted over time?
I don't see that happening anytime soon.
It's about the talent. What talent do they need?
Yeah, I think, you know, you can have very comfortable sort of golden visas and everything else for top talent coming in. And I think top talent have been used to being made very comfortable in the GCC when they come out there. But
Yeah.
I think citizenship is probably not on the horizon. Yeah.
Yeah, but let's stay with that access of GCC to Africa. Maybe you see that dynamic playing.
Again, Jeff and I were just talking about the, IPO. So in Africa, IPO is like a distant horizon opportunity, like 2030. But we believe Saudi listings are, somewhat sooner. And then Jeff was just talking about the possibility of a Saudi listing leading to a London Stock Exchange listing. So we really like the idea of preparing companies for that sort of dual listing. And that seems more realistic than NASDAQ for the majority of, high growth African
Seems like
companies.
rejuvenate markets because the markets are floundering here and in Europe.
And Mark, the other thing is, Launch Africa has such a warm welcome in both Saudi and UAE because of the dynamism and resilience of African entrepreneurs and their ability to withstand, capital scarcity and a lot of ambiguity and uncertainty. So we're always being asked to, both fast track the growth of our companies into those markets, but just also to provide a lot more tech and business talent who are resilient and prepared to work hard and infuse the culture.
So Nicholas, can you make a case in all this for Europe and UK? Or not?
Wow. We're talking to someone who fought to his last breath against Brexit.
Yeah.
So we know the damage now. We know that Project Fear was not fear, it was reality, and the economic damage is enormous. Many companies had to basically close down because they couldn't afford to go to another nation to be a hub for their logistics because they couldn't use the UK because of tariffs. So the case for UK, it's a great place to live. That's the truth. Yes, London is full of crime and deaths. But when you look at the statistics of most cities in the world, the question is, if you want to live in London, New York, Jakarta, you're going to have to put up with the crime. In terms of investment, I think it's a solid place to invest. If it is an asset class, the UK, in terms of a region of the world or Europe, but UK as a place where most investments come to Europe, and UK is one of those because it's traditional. It's a traditional place to invest. People know it. I believe in the UK, but I don't know. It has a vision of itself in the future, and that's the problem. Brexit shows that there's no vision of where they want to go.
And what do you think of what Draghi said a few days ago?
About the United Kingdom?
No, EU. I don't know if you saw the.
Well, listen, the European Union, there's people that love it and people that don't like it and people that hate it. Now, Europe has done its job, which is to keep these nations from killing it themselves. So the job of the European Union, yes, it is now more economic. We need the money. Yeah, of course, we need to invest. We need more money to invest. Otherwise, we're already being left out of the game in many things. We need that extra 300 billion, 350 billion of investment. But Europe is a great place if it's stable. If it's unstable, does the UK feel less stable because it's out of the EU? Yeah, it does. I feel less and less stable now because we're out of the EU. We're out of the great single market. So any startup that wants to start a business in the United Kingdom knows it's out of the single market. I believe in Europe. I believe in a more democratic Europe where you can vote the president of Europe. It is a bureaucratic body, but I believe in it for the future. Yeah.
Maybe, Sri, I'm gonna open up for questions, but Sri, do you?
Mark, I have an observation. Mark?
Yeah.
Go for it. And acknowledge.
Oh, I'm a big believer in Europe, though I don't live in Europe. I lived for 2 years in London. When I look at, 1,400 companies with a pretty strong global market cap and marquee, I think we try to mix between social welfare programs that European Union wants to fund. That's what Mario Draghi is talking about, not about private companies' market cap and growth. A lot of their growth is coming from overseas. LVMH, Novodisc, you can take SAP, across the diverse segments. You can take Sanofi, you can take Total. So to me, I've been tracking, the European markets for over 20 years. There's always this confusion between capital needed to fund the social programs in terms of economic integration, rather than about the companies that are actually driving the growth of the market cap and creating employment for those who have skills, and there are plenty. Whether it is Holland, whether it is UK, whether it is Germany, whether it is Scandinavian countries, and we haven't even factored in the emerging Eastern European markets. So I'm a big believer in Europe.
So it's good. Does everyone agree with our panelists? Or do you have
Someone is shaking his head.
Who's shaking their head? Oh, Stephen. I remember my first time I was in India, and then this head was shaking, and I was negotiating. I was not negotiating well because I didn't realize he was saying yes.
I agree that there are a number of really good companies. I think the Draghi plan is to make Europe competitive with the industrial policies of the US and China. And I think without that, I don't know how they get out of there, how they get back to competitiveness. I'm not sure what industry is going to lead the way. Banking has been somewhat eviscerated in Europe. So I'm just not sure the sector that drives, or what the economy drives the competitiveness forward without more focus and a better competitive landscape for the rest of the world.
All right, someone's got to speak out for Europe here. Anyone? The UK? No one's going.
Oh, wait, I'll speak up for you, okay?
A little bit less.
Just
In many respects, curious for your perspective.
I'm just going to say, I've lived outside. I've lived outside the UK for the last 11 years. I'm no great fan of the UK, but where the UK really does lead is on scientific innovation and its ability to spin out of universities, and also on fintech. I think it's really a world leader in fintech, and the EU is overburdensome with regulation, whereas our financial markets work in such a way that regulation is popular and very acceptable to international investors, but not overburdensome. And then the US is more of a free market approach in terms of some forms of regulation. I mean, I find it quite interesting talking to US people when you're talking about private deals, and they're can you sign this disclaimer? Can you declare that you were a qualified buyer and stuff? And that doesn't necessarily need to happen in the UK. It's usually from you. When I say people, I'm asking for a friend, talking about a friend. But yeah, I mean, I think in its favour. That said, I think the UK is largely directionless in terms of its leadership, and Brexit has been a manifestation of that. I mean, when I was living in Singapore, Jeremy Hunt, when he was Chancellor of the Exchequer, came out to Singapore, and literally for half an hour, sort of pre-dinner drinks, all you can say is, well, we've got the rule of law and education to talk about, and those are the two other things to talk about. I mean, our regulatory and legal system, but also our education sector, which leads to the university spin-outs, are very, very strong. And because we're a small country, the US, there's no denying, is the world's biggest market still, but it's very fragmented in terms of, West Coast is a completely different place to East Coast, is a completely different place to the Midwest, it's a completely different place to the South.
Also introduced us, even during COVID, to Indonesia, South Asia, China. We're not even talking about those here.
Yeah, I mean, look, I could pipe up on that, and I will. I'm a huge defender. I have a little platform called Asian Future, and that is predicated on the belief that actually everything that is built, if Asian consumers don't adopt what you are building in the next decade or 20 years, it doesn't matter, really. Like, Asian consumers have to adopt what you're going to do. They are going to be the driving force for the next decade or 20 years.
What about Africa?
In 20 plus years? Yes, I mean, Africa's coming online. If you're risk on, go Africa, go Latin America. But if you want to, there's a lot of opportunity in Asia now. And if you want to mitigate China risk, Southeast Asia is a very interesting market. But again, it's very fragmented. So Indonesia is not Vietnam. Vietnam is not Thailand. Thailand is not Malaysia. They are individual markets. It's a bit like, going to the US and saying, am I addressing, the West Coast, largely blue Democrat, right? West Coast, different type of consumer to the Southern Belt states where you'll get a different kind of consumer.
Anyone else before we move from regions and make the case for the UK?
I'll put a slightly different lens on it. So if you look at it from a sector-based lens, you can then start to look at which regions would lead in different things. So if you look at the sector that I'm most commonly invested in is healthcare. There is no other industrial sector in which 5 of the top 10 companies are in Europe other than pharmaceuticals. And the pharmaceutical industry in Europe is very, very strong. Out of those 5 or 6 top 10 companies, there are 2 based in the UK. There are 2 in Switzerland. There is 1 in France and 1 in Denmark. So you can see how strong that sector is here. 8 years ago, Pfizer tried to buy AstraZeneca, and there was a revolt by shareholders. Today, AstraZeneca's market cap is twice that of Pfizer. And they don't want to buy Pfizer because it's such a basket case now. So I think that we have to, and I agree with the previous speaker about science and technology. I invest in the US, my fund invests in the US and Europe. I look at science coming out of UK universities every day. I serve on the investment committee of Cambridge University, and I'm involved with one of the colleges in Oxford. And this quality of science as a former scientist that I see coming out of the UK is often better than what I see coming out of US universities. So I think we should have a more sort of narrow lens on what sectors we want to invest in.